Hey everyone, so today I'm going to take you through a live trade, a live short credit spread in the markets where I think the price action has been extreme. And as a contrarian trader, that's what I look for. I look for a price extreme and then go and sell the options in the strength of the market. Meaning, the one thing I've narrowed out or I've singled out for today's trade, it's going to be a live trade, but I want to take you through my exact steps as to how I select the strikes, the days to expirations, volatility, and everything else in between. So first up, I've chosen all these futures options here, futures markets. The one that is more interesting to me, or the most interesting, is the euro market. Why? Because it has dropped down. Look at this. Look at this price action here. It has completely dropped down from its peak at around 1.125, and then it has gone down towards 1.08 level. Now, the market has gone down, and then I'm trying to sell some puts here because I think that's the opportunity because the options are more juicier on the put side. So let's go ahead and select, and let's go through the whole trade setup. And I'm going to put the trade live here in my live account, and then we will try and get it filled at our price. Now, first things first, you should look at the chart and then IV. IV is low, I get it, and that's why we're taking a very small position here. But if you look at the average IV throughout the year, it is around its average. It is on its butt, but it's on its average number, around 7%. And so I'm not really worried about implied volatility here. Usually I would sell at these peaks, but then there are not many opportunities in the market right now. So we're taking what we are getting here. Next up, so we've checked the price action. Fine. Now let's go to the trade tab. Try and keep this video really short so people can watch it with interest. The next thing I would check is the open interest and volume columns. So look at all this because now we're selling the put side. I want to see the put side volume and open interest, which is what it's here. Usually I would take 16 to 17 deltas, which is a half point strike. Now, I try to stay away from half points because even though this half point strike has got good open interest, but look at the long strike. We would need to buy this one to complete the trade because it's a credit spread, and then there's not enough volume and open interest in this half strike, which is sitting at 10 deltas. So what we are going to do here is we will take the 20 deltas to short. Good open interest, good volume going through, and then we will buy the 1.05 strike. Try to stay away from these half strikes because there's not enough volume going through. Yes, there's enough open interest, but again, when you try to get out of the trade, you will run into some issues. There'll be more slippage. So let's set up the trade now. We've selected our strikes, our expiration cycle. Again, my sweet spot is 45 to 50 days. The December cycle provides that. Go in there and then also check the underlying futures. So here you are selling this in this future in the Z contract. Now go up and check what the Z contract is. Z contract is basically the December contract, which is here, which is 60 days away. So the December contract is 60 days away, and that's what these options are underlying right now. And then the next thing is short the strike, right click on 1.06 strike, vertical, because we're selling a spread. I'm only going to sell one contract. That's what my appetite is. That's how much risk I take in each underlying, because in order to keep yourself diversified in these markets, you need to keep some dry powder out there too. I was testing this trade before, and I think I was probably collecting 15 points, but right now this trade is trading at 14, so we'll try and go in there with 14 ticks. Now always set your slices, break even to the expiration date, 12/7 in this case. Make sure this date on the top is also 12/7, which matches your slice date. This trade is showing us the probability of in the money with one standard deviation move. You can change this by going into the scroll button here, drop down, and then select 2 standard deviation, and you see where the underlying is expected to move from now, between now and expiration, with a 2 standard deviation move. But then we don't want that. We're only selling it at 1 standard deviation. We have an over 80% chance of winning. I can see that by going into my -10 +10. Sorry, in my selecting the break-even slices. Yeah, look at this, 85. That's what we look for. A number 8 in front of anything, it looks pretty good. That's what it is, and that's what we look for. Now, hover over your chart and see your max profit. Your max profit in this trade is obviously what you will collect. So in this case, you're collecting 14 ticks, and each tick is about 15.625, I believe. Maybe not. Each tick in the euro currency, I'll have to confirm that, but each tick, we can check that. I'm collecting 175 divided by 14. It's 12.5. Sorry, yes, 12.5 is 15.625 is in the bonds. The bond market are really weird. Anyway, so we know our max profit. We know our max loss is 1,075. Look at this number here on the bottom left of your screen. It's trading for 14 ticks. So I'm going to confirm and send. I'm collecting 175, but I'm paying $4.50 and $3.24. So $7 something to get in, and then $7 something to get out. So keep that in mind. $15 will be taken away for commissions. Your total buying power effect right now is $309. Go in with this. Let's try and trade it. Confirm and send. We've checked everything. We like the trade, the price action on it, and then let's see if you can put it in. There you go. It's filled. Now I have a real trade filled up here. How will I manage it? Like I said, if it goes against me, I will sell a call side. I will sell the call side. Right now I'm in the put side. I will go down and then I will sell the 20 delta call side, or whichever deltas it is trading right now at. That's how I'm going to manage it, and then we will try and close out. Once there is an iron condor set up here, it goes against us. We're in an iron condor. We will try and close out the spreads individually. So we will close out the put spread and then the call spread, depending on which way the market moves. If needed, we will move the spread into a different expiration cycle as well. Now, I also wanted to show you the trade that I currently have on in the bonds market. And this is the only trade I have, the bond and the interest rates. They're both pretty correlated. So, I'm expecting similar P&L. I do need to change this thing here on top to 1123. Go forward, change it to 1122, and look how nicely this trade is sitting in the middle here. I started this with a put spread because the bond markets were down too. So I sold a put when it was around 120-ish level, which is where it currently is right now. I think I've sold a put here. It came down on me a little bit for a couple of days, and then I think I adjusted this too early. I should have waited, but anyway, it went back up again, and then everything is back in line now. So I'm waiting for this market to stay within the range, somewhere here and somewhere here within this range, and I will see how to adjust if it goes against me. I hope you like this video. Let me know if any questions, anything, put it in the comments. Thank you. Bye bye.